Hey, welcome back to the Hub channel. My name is Brandon, and I am here with the one, the only, Rob Roy, with today's market update. Rob, I see you're up in the cabin today. Things are looking really nice up there, but how is the market looking? We're looking forward to hear your suggestions, your comments, your concerns. What's going on, Rob?
Well, first of all, Brandon, I got to say, I don't know what's going on here. Yes, I'm up in the cabin. Everybody thinks that I came up here to escape the storm in Florida, which actually
Yeah.
wasn't the case. This was already planned. It just kind of worked out that way that the storm came in right afterwards. But I don't understand why you're the one in a collared shirt with a logo on it, and I'm the one in the T-shirt now. What's happened here? We've done like
It looks good, huh? It looks real good.
flop here. Yeah, and I'm wearing all my Red Bull stuff from the Formula One
Yeah.
fans in honor of Max Verstappen setting the record with 9 wins in a row. So all you haters, just go on and do your hating because I hear about it all the time. But hey, the guy can drive and he's got a good team. And if you've watched that F1 series on Netflix, is awesome. If you haven't, I encourage you to do so. But
Oh dear, I think what happened, we might have lost Rob for a second. Hopefully he's going to come back here. There, you're back. Okay, we're good. You're back. We lost you for a second. I think it's because you were cussing me out because I'm wearing such a nice shirt and stuff, and then you were anyway.
I know. I love a financial shirt. I want one of those. So
hey, I'll bring you one. I'll bring you one. I'm going to come out to Florida next if we can visit you. Anyway, let's get over right to the charts here. I'm going to throw your charts on the screen. What are we looking like in the spider today?
Well, we had this move back up on Tuesday based on the JOLTS report, which is basically it's the jobs report and looks for labor transfer. In other words, people that have a job and they're leaving a job, oftentimes you leave a job for a higher paying job, or recruiters come get you and offer you more money because you're in a field that they want and there's a limited supply of labor in that area. So you look at that from a couple of different standpoints, and it was a little bit of a weaker report, and that gave the market some fodder, right or wrong, of the fact that, well, the Fed's been so concerned with wage inflation, and this is one way to see that wage inflation may come down, and perhaps they're not going to raise rates again, which gets us closer to looking to when the Fed may at some point cut rates again. So regardless of how you feel about that, the market did move up significantly on Tuesday, and we've kind of just churned a little bit. We have a weekend reminder to everyone that Monday is Labor Day, so the markets will be closed on Monday. So we'll see how things close. As you know, Brandon, oftentimes we've been doing these live shows at 2 p.m. and wherever the market is when we're doing the show changes dramatically between now and when we close. Perhaps we get a little bit of profit taking into the close. We are a tiny bit above the 10-day moving average here, not significantly so, but just a little bit. And we had the non-farm payrolls report that came out this morning. We'll be talking about more of that in the U.S. market update at 4 o'clock over on the EWO channel. So make sure that you take a look at that. However, even though the non-farm payrolls report showed more than expected jobs added to the payroll, then they revised down June and July. So you had more this month, but then they revised back down. And that, that's where a lot of conspiracy theories come in, is you get the initial report, and this is called, the initial jobs report, but then they revise it 16 times after that before they give you the final one, and it almost makes you wonder, are they massaging it to get it exactly where they want it? I know that's a little conspiracy theorish, but that's what happened today. It hasn't been enough, at least at this point, to send the market down too much. So we're still kind of consolidating that move to the upside on Tuesday. So let's take a look at the volume. And I think the most important thing to note here on volume is we did have good, solid average volume on that move up on Tuesday. We've had much less volume since then, but we've been consolidating, and that's what you would expect. So you have to respect the fact that that move up on Tuesday had solid volume, and perhaps we are on this wave 5 move up to that 480 target. We do have this gap that needs to be filled right there. I don't know if we're going to quite get there. But even if we do get there, I'm still not sold on the bullish scenario yet. I think we could move up and fill that gap and still roll over. However, if we take out this wave 3 high at 460, this is where you come into technical trading on listening to what the charts are telling you, not what you think's going to happen. So, we can go through all the scenarios, Brandon, on the negatives that are out there in the economy. But nonetheless, none of that matters. What matters is actually what's happening in the market. And so if we break above 460, then you have to turn bullish. And we will do so. We're kind of balanced right now between some upside trades and some downside trades. So that's what's going on right now. Let's take some questions.
Well, yeah, the interesting thing too when you go over that stuff is money speaks volumes. So if you follow the money, you follow the truth, right? People can say anything they want in all the news, anywhere else, in all the media outlets, anything, and they'll tell you all this stuff that's happening. But the truth really comes out when you go to the market. What people really believe is you follow their money. People aren't going to put their money if they don't believe in something. So, yeah, you say the market's telltale sign right there. So questions right here. We got a couple of really good questions here, or a couple of really good stocks that we want to look at. Will, he wants to take a look at Tesla first. Then he has one more here.
Well, that's good. We haven't actually looked at Tesla in about 10 minutes, so we'll take a look at
yeah, I was going to say. Let's check out Tesla. Have you heard of Tesla? Is Tesla still? Yep, let's do Tesla. Elon's doing something.
Well, it used to be the one that was on there all the time. And, we're moving lower today. But we did have a nice bounce back to the upside. And if you look at, and this is what we were just talking about, Brandon, the charts. So we had gotten a little bit oversold, rallied back up to resistance, which is at 260. We're falling back down a little bit today. If I'm being fully honest, which is what we should do here, I'm surprised that we had as much of a bounce as we did. Elon's been very adamant about it's going to be a rough next quarter because they have closed a lot of their factories because they're retooling and upgrading and making better Tesla cars for the future. But yet for this quarter, it's probably not going to be very good, and the numbers of delivered vehicles will be down, etc. And it took a while for people to get the message. And then we came back and look where we went, Brandon, exactly to the 61.8% Fibonacci level on the wave 4. And then we started back up. So as classic of an Elliott Wave pattern as you can get, right there to 260. We've bounced down, but look where we are today. We're right at the 10, 30, and 50-day moving average are all at the exact same spot, which is where we are if we were to close the day right now. So I think you would have to say that Tesla is encouraging. This move back to the upside is a positive one. We came all the way down, tested the level of support that you would hold if you're bullish Tesla, which is at 220. It did, and so we're back up. So perhaps this is just a momentary weekend going into a holiday weekend, once again with the markets closed on Monday, to where we're just going to kind of square some positions and hold Tesla where it is right now. But I don't think you can look at this recent move in Tesla as anything but a positive as far as the potential move higher. My goodness, if it can move to the upside like this, when the CEO is telling you we're shutting down factories and we're not going to produce as many cars and the stock still goes up. I mean, what can be a negative on, I don't know. So, you got to respect this level here. And as you know, Brandon, I always try to give the aggressive versus conservative viewpoints. If you are aggressive, you're excited about the fact that we're above all those major moving averages. If you're a touch more conservative and you feel better waiting for a break that gives you a higher percentage, wait and let it break above 260. So a break above 260, and I think we're at least going to go close this gap that it goes all the way back to July 19th. I think that's clearly in the cards, but if you're aggressive, you can probably say, hey, okay, we went up, we hit resistance, we bounced our head back down a little bit, but we're above all these major moving averages. I'm going to go ahead and step in now. So an aggressive move is to respect the higher move off of that 220 level. The more conservative move is show me the Missouri trade, get above 260 first. But pretty interesting stuff there on Tesla. I can't hear you, Brandon.
Oh, I was going to say, Will also said they dropped the price of the Model X.
Button, there's a mute button.
Get out of here, Rob. They dropped the price of the Model X from 120 to 80K today. Hey, Rob, go sit in the back. Go sit in the back. Here I am trying to figure out how to make you look good, and this is the words I get from you.
God, that's a tough job, dude. You got a tough job.
Tell me about it. No Tell me about it. Holy cow! So you push the button. Whatever. Will's next one. He's got XLE on tap right here. What do we got on XLE?
That's a good one, Will, because energy has been suffering for quite some time, and we have a bit of a move back up. Oil has moved higher. I actually did a speculative trade for our traders over at ewo.com, and that was due to the storm in the Gulf. It was moving north. It had been forecast to move northeast, and it hadn't done so. And as the further up in the Gulf that it goes, the near it starts to get to that Gulf Coast around the Louisiana border, the more you start looking at oil rigs being shut down. Oftentimes that will put a bid under oil. So I sent out a speculative alert due to the storm, nothing else, but just due to the storm in the Gulf. Not much longer after the alert went out, the storm finally did turn to the east. We had a short-term move to the upside in USO, which we took. So we got a really quick gain, and then it continued to the upside. So could have held that a little bit longer, but it is definitely given a bit of a bid into the XLE. Energy stocks, not just the USO, but energy stocks in general are moving to the upside. We're trading right up above that 10-day moving average. And we're getting to the point where if we break above this previous wave 3, and boy, Brandon, that's not going to feel good at the gas pumps. But if we break above that level of 90, with the oil trade being back in favor, you have to be bullish there. So the fact that we tapped the 10-day moving average on the low today and have traded above it, again, we'll see where things close at the end of the day. We don't know that yet, but this is where we are. You have to start taking a look, I think, at the energy sector as a place to go. But if you're a touch more on the conservative side, let the XLE get above 90, and then you go long. But it's, there's definitely a bit has returned to the energy sector after about a week or so of weaker movement. So that's a good one to look at, Will. You're in the right place, I think.
Well, you are in the right place. Okay, Alexandru wants to take a look at Coin. Let's check out Coinbase, see what's going on.
Yeah, Coin, gosh, and Bitcoin's not having a much better day today either. So, it's there's the quote from last night's close. We'll have to wait until after the end of day data is updated. But we have Bitcoin, which we will talk about in the U.S. market update over on the EWO channel later on, moving down towards the 25,000 level. And I had mentioned, I think here, Brandon, that back when we had this big vertical move, if we were able to get back into 80, that would be a great place to come in and take a position. And not only did we get back down to 80, which I wasn't sure we were going to, we came all the way down to 75. So if you were patient, you even got a little better entry. And then we bounced up, and we had that big move up in Bitcoin. We didn't quite make it to the 29,000 level for resistance, but we were moving to the upside, it seemed. But here we are, right back down again. And you've got to look at your stop is at 75 on Coinbase. If you got in at 80, if you got in at 75, regardless, or if you're looking to get in, I think I would wait and see if we hit 75 again. But the fact that we bounced up and have turned around and given it all right back, I think has to be concerning as far as what's going on with Bitcoin. It looked like we might be off to the races, but everything reversed immediately. So it was just a one-day phenomenon on the move higher. So if I was long Coinbase, I'd be okay down to 75. But if I'm looking to get in, I think I would wait until we bounce off 80 and head higher.
Yeah, I think Grayscale, obviously good news for Grayscale when we had that huge jump a couple days ago for Bitcoin, and then Bitwise pulling their ETF application today. Absolute reversal of good news. So it's like, good news, bad news, bears. And holy cow, so much going on in the crypto space that we're getting this whipsaw action. And when the illiquid markets come into play, then that's what happens. The other one we're looking at is USO.
Is that like they got their feelings hurt type of thing? I mean, yeah, it's pretty interesting.
Well, there's definitely more behind that story of Bitwise and the SEC and everything going on there. I think there's bigger puppet masters at play controlling them to make them pull their application. So I don't think it was all them, but it's the story behind the story that people are trying to read into here. And I think that's why we had the dump in Bitcoin, and subsequently Coinbase is also going to take a little bit of a hit there. So everybody trying to follow regulation to the letter of the law right now, and they're gonna go through some obstacles here. So
just when we thought the regulatory bodies were out of the way, Brandon, I mean, when they finally it's almost,
the SEC.
Gosh, I hate to use this analogy, but it's almost like, what goes on in China. The government comes in and they intervene against their big companies. Then they back off, and it seems like, okay, they're going to let things go. And then they step back in again. And it's just this constant uncertainty of when they're going to come out and make some sort of a comment. Makes it really difficult to trade in that environment.
Yeah, it's crazy environment that we're living in. All right, USO, second one there for Alexandru.
Good one, Alexandra, USO. And as I said, I had sent out a speculative alert for our alert traders at ewotrader.com. We got a nice quick one-day gain, and now I feel like a complete idiot because look at that. Talk about getting out too soon. Holy cow. This is way more than the storm. My speculative trade was based on the storm in the Gulf and shutting down some oil rigs and putting a short-term bid under the price of oil. And my goodness, if I would have just held that trade on a little bit longer, you can never second guess a gain. You take a quick one-day gain, you got to be happy with that and not second guess it. But then you go back and look at where it could have been 3 days later. It's hard not to say, gosh, I wish I would have waited a little bit longer. But the plan was, I executed the plan based on the theory at the time. Why we're continuing to bounce higher like this in oil, I don't know. But we'll just ask about the XLE. And when you have oil moving like that, I think you can probably look towards the aggressive side on that XLE trade. Now, the negative here is that we've got this gap up. So we've gone vertical here in the USO, and we've got a gap. So there's no way I could chase oil right now, USO. We're overbought with a gap. So, perhaps we go higher on Tuesday, but I can't chase that move. My disciplines just won't let me. So we'll see if perhaps we get a pullback on the USO at the beginning of the week, and then perhaps we get a new entry. But, when you start chasing vertical moves with gaps, that looks awfully lot like an exhaustion gap, where it's like all of a sudden holy cow, oil's moving back to the upside. Let me get in, and everybody wants to get in. And then who's left? And you get a bit of a lull from the buying standpoint. So I can't chase that move right now, but I'll be watching it closely. If we pull back, even if we just pull back to where the wave 3 high was, right here around 75, I think that could be a good entry to go longer. But when you see that, Brandon, can you imagine what we're going to be looking at the gas pump here in the next couple of months? It's
it's kind of rock
really for the wallet for sure.
We passed the station yesterday. My wife's like, "Why is gas so high?" I'm like, "I don't know. Let's talk to Rob. We'll figure this out." So she might be giving you a phone call here soon. What's
going on today? I have no idea. I mean, I did think that the storm oftentimes puts a bid, especially when there's storms in the Gulf. But why it continued like this, I have no idea.
Right. Let's go ahead and wrap this up with this last question here from Alpha. Wants to look at PFIZER, see what that's doing right now.
Well, there's a good stock that we haven't heard from in a while. So, PFIZER would be something that if you're concerned about the economy, if you're concerned about the market, it would be a stock that you would be interested in owning, parking some money in, and you can see it's kind of trending down. And that coincides with the fact that the S&P lately has been trending to the upside. That makes sense. This is a sector. PFIZER is a really strong company, regardless of what's going on in the economy or the markets. As far as weakness, people still need their medications. And so PFIZER is one of those defensive stocks that's a good place to hide. However, when the market is screaming to the upside and you have the high beta names, we had the deal with NVIDIA and Google, and those are the stocks that you're seeing the big jolts to the upside. You're not going to see that kind of move very often out of PFIZER. But when we're seeing a move back to the upside in the general market, that's going to be troublesome for a defensive stock like PFIZER. As strong a company as it is still just kind of channeling here. The wave 5 is awfully close to that 61.8% level. So I don't feel like there's anything to move PFIZER below 35. But is it going to have the kind of beta that some of the other stocks do? If the market continues to move to the upside and we rally after the holiday close on Monday, if we have a rally in the holiday shortened week next week, that's going to be problematic for a stock like PFIZER. If it breaks below 35, then you have to start to get bearish. But it would really be surprising to me. I just feel like there's a lot of big institutional companies that like to hold PFIZER as a defensive play, balancing out their portfolio, etc. So as long as you can stay above 35, I think you're okay holding this one. A break below 35, though, changes everything, and you can start to look on the bearish side of things. But when we came down and we tested it back here on the 16th of August and started moving up, it felt like, that's a really good place to be. And then right about that time, the S&P turned up because of that JOLTS report. So a little confusing there. Perhaps we stay in the trading range between 35 and 38 there. The best I see as far as an opportunity to make money from a trading standpoint in PFIZER is some sort of a sideways trade, calendar spread, butterfly, something along those lines. I don't see it breaking below 35, but I don't see the catalyst for it to move much higher either. So I think sideways is the way to go there.
Oh, Rob, that summed it up really nicely. Thank you so much. And as always, thank you so much for dropping by the HUBB channel today. If you guys are here, by all means, and you're not subscribed, hit that subscribe button. We want to have you guys here back for more live streams. Rob is going to be going live, or not live. He has a show later today over on the EWO channel. So if you haven't checked out that channel, go ahead and check that out as well. Rob is insightful as ever over there and gives us all of his insight on the market and everything else that has gone on this week. It's been another busy week, Rob. Anyway, appreciate you coming by, Rob.
Yeah, we have several things to talk about on the weekend update.
Yeah.
Love these live shows on the Hub Financial channel. So glad to have you all here, and tell your friends. And we like the interaction. You can tell we have a good time here, so it's fun. We talk about what's going on in the market and answer your questions. So tell everybody to subscribe here. We do it every Friday at 2 p.m. and it's a lot of fun. So yeah, thanks, Brandon. Appreciate you having me once again.
Yep. All right. We'll see you guys all later.
All right.